afternoon, everybody. It's great to see so many people, and it's of course a wonderful privilege and pleasure to welcome Joe Stiglitz to the School of Public Policy. I understand we also have students from the economics department, from the economic policy program. Welcome to all of you. I first of all want to thank you, Joe, for a fascinating talk last night. I think there's a lot for us to learn about knowledge, learning societies, be it in a democratic or in a less democratic setting, but it's certainly important to emphasize how critical knowledge as a public good, be it local, national, or global, is in promoting open societies and promoting economic growth and innovation and advancement and even happiness, I would assume. Maybe we get an opportunity to hear a little bit more about this as well, but for this afternoon, I thought maybe I'll open with a question or two before I hand the floor to you. I had the pleasure and privilege and luck, dare I say, to actually spend some time with Joe Stiglitz at the World Bank when he was chief economist. I was working in something called the Corporate Strategy Group that was advising the president at the time with yet another reform of the World Bank and the international organizations. And as many of you know, the World Bank right now is going through yet another reform process with its most recently appointed president. And this is a phenomenon that we see in many other international organizations, be they concerned with economic governance, but also with other forms of governance. The UN and all its agencies are, if you will, in a state of permanent reform because we feel there is a crisis of global governance. We don't feel well governed. There is very little there are no political spaces where people can deliberate as we know it from the national or the local level. So I thought maybe given your experience, Joe, both in leading many global commissions and being very deeply involved in not just economic global governance, but many others. You just had 2 days ago, you had an op-ed on Ebola, if I remember correctly. Whether you could share with us what your perspective is on global governance. Are we in a crisis? And if so, what could be done? What about those international institutions? After all, they have been created almost 70 years ago, and the world that we live in today doesn't resemble the world of 1950 or 55. This is a completely different world, so one would hope that those organizations adjust to the world, and if so, how could we adjust, and what do you see would be some of their principal goals and aims?
Okay, well, thank you. And it's a really complex question. I'm not going to be able, I've given a lot of lectures for 2 hours on the subject, so well, let me try to be very, very brief. You know, I think the basic problem is that we recognize that we live in a highly integrated global world. And therefore, there are lots of externalities, lots of interdependencies, and that means there is a need for collective action. So we all recognize, at the time, Jim Wolfgang was becoming aware of the notion of global public goods. That concept was just being developed. I'd written a paper about it in 1995 for a UN meeting, and it was actually really developing as a major concept of global public goods, and global externality. So the idea that there was a need for global collective action has become recognized, but we don't have a global government. Domestically, when we have a need for collective action, we have a political framework to do it, not a perfect one, but we have at least an agreed framework for doing it. But where the global community has gone is what I describe as global governance without global government. So what we have is a pistache, a whole variety of agreements, institutions. We have the World Bank, the IMF, the Financial Stability Board, really overlapping, complex set of institutions that in some ways work a lot better than you might have thought, given the chaos in the structure. And there are some things where they've worked very well. For instance, there was an agreement, recognition about 40 years ago that there were the holes in the ozone that were caused by the ozone-destroying gases, and there was an agreement made in Montreal to restrict those gases, and the world responded. and the holes are being repaired. So that's a real example of success in global governance, where a problem has been recognized and we've responded. We've recognized the problem of climate change, except a few Republicans in the United States, and we haven't been able to respond, partly because of that. And I can talk about the way we ought to proceed given that. But we've created a number of institutions that have been halfway houses, that have done something, but not as much as we would like. In particular, I think one of the hardest problems, there are, I guess I would say, I list a whole set of problems. One of them is that what I call the smokestack structure of these. You have trade agreements run by trade ministries that represent producer interests for the most part, rather than national interest. You have finance ministries and central banks running the IMF and the Financial Stability Board. So domestically within our countries, we realize that financial policy, environmental policy, trade policy are all related. We have separate ministries, but there's always somebody like the Prime Minister who's trying to bring these together, imperfectly, but we have a framework for making trade-offs across areas. We do that very, very badly internationally. Secondly, it was the point that you made, which is that these institutions lag. Particularly the economic ones. The Bretton Woods institutions were created in 1944, and the economic power structure, political structures, are different today than they were 70 years ago. And those who were running the show then don't like to give up running the show. So totally understandable. I don't know how many of you know, which country now is the largest country in the world economically? China, in September, in PPPs, became the largest country in the world. The United States has not blazoned that news across our newspapers to say, okay, another defeat for Obama is now the country, there's nothing he could have done about it. But it's something that is, we're trying to pretend never occurred. But China has not been given the economic role in the international institutions that would accord to the largest economy, largest trading economy, largest financial, savior in the world. We just haven't adapted. Those are at least two of the major problems. So where are we going? Well, I think that we're moving gradually to a better, but very slowly, and the problem is that the problems aren't waiting for us to figure out how to solve them. So some of them are getting worse, like climate change. So I mean, I view that as a major challenge because, and on that area, what I think ought to be done, is that the rest of the world, which has recognized it's a problem, ought to make an agreement without the United States and impose tariffs on the United States and cross-border and fees for offsetting the carbon emissions of the United States. So in other words, tell the United States, either you impose a carbon tax or some other way, a price of carbon, or let us collect the tax. And we'll collect the tax in a punitive way because you are hurting the rest of the world. And I've argued in one of my books called Making Globalization Work that under the WTO rules that that Europe can do this. So I think really it's a time to give up on the United States and just go ahead and do it. So in other areas, countries are giving up and going their own way. So let me give you another example. In July, the BRICS Bank announced the creation of a new financial institution, actually a set of new financial institutions, to provide, in the case of the BRICS Bank, to provide finance for mostly infrastructure, but other development lending, I and one of the other chief economists of the World Bank were actually behind this, and our view was a huge need for infrastructure. The World Bank, the U.S. refuses to recapitalize the World Bank to give it the ability to lend. The U.S. refuses to change the governing structure of the World Bank, even though the G20 agreed that it had to be done. And so we're at a stalemate. And so the answer was for the BRICS to go ahead on their own, create a new institution with new mandates, new instruments, new governance, representing the 21st century, leaving the World Bank where it was. The reality is that the BRICS, these 5 countries, are larger than the advanced countries were in 1944 when the World Bank was founded. So that gives you a little bit of a picture of the change in the global economy and why things are not going to wait. Now, the unfortunate thing is that the U.S., rather than cooperating with the creation of some of these new institutions, is actually trying to put roadblocks. So, for instance, another initiative of China is to create an Asian investment fund. And the United States has been going around Asia, which would bring a multilateral institution to, you might say, augment what the Asian Development Bank is doing. But the Asian Development Bank has been unable to recapitalize because of U.S. opposition, has been unable to change its governance. So they're trying to set up a new institution. And the United States has been going around trying to twist arms in Asia for other countries not to join. In the end, they'll fail. But and this is sort of foolish, sort of putting your head in the sand and not recognizing the world is changing. So I think, in short, I think that there is this real problem of a lag, but I think that the awareness that we are a global community is so strong, and the problems are so strong, that I think we will be making some progress.
Okay. Maybe I could, with your permission, just ask one more question and hone in on one area of global governance. Since you mentioned this problem of a lag, we talked about it walking over here, and that's the idea of a dialectic in the area of global financial regulation. That there's a constant, if you will, try to catch up of the regulators of those that need to be regulated. Financial institutions, as you all know, are very, very innovative. In many ways, actually, regulation spurs further innovation to circumvent those regulations. So you have a constant trying to catch up. And that, in many ways, at least I would think, lies at the root of the global financial crisis that we saw in 2008. And again, the question is, did the international community, did individual countries, if I remember correctly, were quite critical of the Obama rescue plan. Did they respond adequately in terms of rescuing, and who had to carry the burden, first of all, the rescue? And secondly, with the G20, are we now in a position to feel a bit safer as far as global financial regulation is concerned? And if we don't, how can we overcome this constant lagging behind of public policy, if you will, of government, of the public, global public interest, global public goods, financial stability? I'm supposed to take the microphone. And how can we catch up to ensure that there is a safe umbrella, a framework within which global financial institutions can operate? And then I'll promise we open the floor.
Okay. So right after the crisis, there was an awareness of that strong interdependence, and that's when the G20 started. There had been a G20 going for about 15 years, but it was a G20 among the finance ministers, and then it got converted into heads of state. And they agreed at their first and second meetings. The second meeting was in April 2009, that there needed to be a coordinated response in terms of a Keynesian stimulus, and that worked pretty well. But they also agreed that there needed to be a coordinated response to regulate the financial system. And after agreeing that there needed to be strong regulation, there had been an institution called the Financial Stability Forum. And it had been created in the East Asia crisis. It was obvious that the Financial Stability Forum, which is called the SFF, hadn't worked because we just had the worst crisis. So the response to this obvious failure was to change the name to the Financial Stability Board. They thought that would solve the problem. If we change the name, that will give people new confidence. No, I'm joking a little bit, but so that's what they did, and they then put forward a work program of trying to delineate what needs to be done. And what was interesting, I think, as I look at what's happened is each country had different. They all agreed that you needed to have coordinated regulation to avoid a race to the bottom. And then the banks, the financial sector started working in different countries and different issues. And so what happened is they come to a meeting and their vision, each country's vision of what needed to be done was totally different. And so Europe would talk about private equity funds. The United States would talk about some banks. Each country was trying to figure out what regulations would help their financial institutions and hurt the other financial institutions. So it was a very complex problem they had to solve because you wanted to have uniform regulations that helped you and hurt your rivals. And so, but people figure this out, and so basically almost nothing has happened. A little bit. I don't want to. Where do you go from there? Well, I think, again, what I think one needs to do is to recognize that actually the financial sector has been using the demand for international coordination as a way of making sure that there's no regulation. And so to give up, in a sense, on, I don't say give up, but to say, look, at each country's most important responsibility is to protect their own economy and their own citizens. And so what each country has to do is to design its own financial system, including all of its relations with foreign banks, foreign financial institutions, to protect itself. So one example, and this is true in Hungary, foreign banks ought to be subsidiaries and very tightly regulated. And what does that mean? Subsidiaries rather than branches, which means they can't take money out of the country. And very strongly regulated so that you can manage the foreign banks just as if they're domestic banks. So your foreign banks are treated no differently. So basically you create a framework where each country has decided on what regulatory framework is necessary to protect their economy, protect their citizens. And so once you have that, then there'll be some efforts to try to harmonize, but that's the only way it's going to happen. Create a series of national regulatory structures that work, and then work to harmonize. Now, one of the important issues that's going to be debated is the United States is pushing a trade agreement with Europe, the intention of which, in part, is to impose American attitudes about regulation, including banking regulation, on Europe. So I've been a very, when I say American, I should make it clear, it's not the American people, it's the American banks. So because I'm a very strong opponent of this trade agreement, not because I'm against America, but because I think that these are special interest trade agreements that are not in the interest of America, that I think, and I really hope that Europe opposes these, and there are lots of details of those that we could go into, but that is one of the examples where the U.S. trade representative, I joke about the U.S. trade representative, nobody has yet told him that we had a crisis in 2008. And so he doesn't know that the world has changed their attitudes about regulation, and he's trying to go back to the world in 2007 without regulation and trying to force that on countries around the world.
Okay, let's open the floor. I hope that was enough food for thought. There's a, okay, so can we take a few questions, Joseph?
Sure.
We have a little notebook here.
Well, as a Vietnamese, I have a lot of reasons to be critical of the ongoing TPP agreement. And I'm aware that you are pretty much critical of it too. Well, besides IPR, like I heard from your lecture yesterday, are there any other reasons that make you so doubtful of this negotiation? And at the same time, you seem to me like you oppose to free trade in general. Is that the right kind of impression I got from you? And can I interpret it like you are pro-protectionism then? Thank you.
My question would be related to the current reform of the copyright, which is like on the agenda of European Commission for this year. And it's kind of controversial topic here in Europe, and I would like to hear maybe what should be your opinion, what should be the key points which should be included in this reform of copyrights.
Okay, on TPP, actually, I've had a chance to talk to the trade negotiators in Vietnam, and there are actually a lot of problems. But first, before answering the specific, let me try to make a very general point about the new trade agreements and why they're different from old trade agreements, and why the thinking today needs to be rethought, and why one has to think about these somewhat different. It used to be that trade agreements were about bringing down tariffs. And so basically there were protectionist tariffs in both sides, say in the United States and Europe. You bring the tariffs down, you have theory of comparative advantage working, and consumers benefit from lower prices. And if it's done in a balanced way, you lose a little bit in your import competing sector, and you gain a little bit on your export sector. And if it's done in a balanced way, the economy benefits because you benefit from economic growth and comparative advantage. So that was the basic idea. Now, even in that old theory, there was a problem, especially for developing countries, which is that it's easier to destroy jobs than to create them. So there's an asymmetry there. And if, especially for a developing country, their financial market, say, wasn't working well, then the imports flood in, but there's no supply response because there's nobody to give a capital and there's no shortage of entrepreneurs. So the exports don't grow and you get more unemployment. So people move from low productivity protected sectors to zero productivity unemployment. And that's not a road to growth. There's a second reason why these trade agreements were often disadvantageous to developing countries, and that is the barriers to trade for the advanced countries are mostly artificial tariffs. But for developing countries, the barriers to trade are not just the tariffs, the artificial barriers, but also lack of infrastructure, lack of ports. You can't export if you don't have ports. So that's why there was a big initiative, and I've written about it, in 2005, what was called Aid for Trade. So that reducing the tariffs was a very big thing for the developed countries, but didn't really open up trade for developing countries. And the evidence was fairly strong on that, particularly for the least developed. And that has led to this Aid for Trade initiative that's become very important. So that's the old trade agreements, the problems with those. But the new trade agreements, tariffs are very low, except for some very what are called sensitive sectors. The problem is that most of what we're talking about are regulations, non-tariff barriers. And regulations, for the most part, are there for a reason, to protect the environment, protect workers, to protect health, product safety, all those kinds of things. Well, now the discussions between producers, the political economy changes completely. The producers on both sides of the Atlantic and both sides of the Pacific can agree that regulations are a bad thing. So they can both talk to their trade representatives, to their trade minister, and say, let's get rid of these regulations. Because producers, and remember what I said, the smokestack structure, trade ministers reflect the interest of producers, historically, not of consumers. So they get rid of the protections, and welfare of ordinary citizens is hurt. So the trade-offs are totally different. I'll give you an example in a second. So that's the overall framework and why it's totally different. Now, in the case of Vietnam, there's another fact. I said before that the only areas where tariffs are high are the sensitive sectors. Like in the United States, there's some sensitivity to textiles and apparel. They're not very big sectors, but the part that remain are very influential senators. So those remain high. So in the case of Vietnam, Vietnam asked the United States, are you going to lower the tariffs of those tariff sectors? And the United States says, no, we can't do that. So there's no real, the things that Vietnam would want, U.S. says, we're not interested. And it goes to the same thing, in the case of Japan, the U.S. says to Japan, you have to get rid of your rice subsidies. The U.S. says, by the way, we can't get rid of our rice subsidies because our farmers are politically very important. And we can't get rid of our water subsidies. The United States grows rice in the middle of a desert. I don't know if you know that. The Sacramento desert, Sacramento, one of the places where you can grow rice, the only reason they're growing rice is because of subsidized water. So you say, let's get rid of that. We're saying no interested, okay? So, and the same thing with Japan. We want Japan to open its markets to our cars. Japan says, we don't believe it's a good thing to have very bad cars that are very bad for the environment, gas guzzlers. But those are the things that we have a comparative advantage in. So we say that restrictions, regulations on polluting American cars are anti-American. They say no, that they're pro the atmosphere. Well, so we say they have to open up their markets to our cars, but our auto companies say no, we won't open up our market to Japanese cars. So those are what we call the sensitive sectors. Very little progress is being made on that. Meanwhile, on the regulations, besides the intellectual property, let me give you one more example that I use in a somewhat inflammatory way, but it's still true. I don't know how many of you are from China. Anybody here from China? How many of you studied the Opium War? Do you all know the Opium War? Well, the Opium War was a 19th century war that the Netherlands and some other European countries, it was a war that was fought to open up markets. There was a trade imbalance, just like we have a trade imbalance now. China had a lot of things the West wanted, like porcelain, China, and the West had nothing that China wanted. So that meant that there were a lot of exports, but no imports, okay? So Netherlands, at the time, figured out a great solution. It was Netherlands and Britain together, a great solution. Poppies grow very well in parts of India, and they could process those poppies into opium. They could export the opium, the ships as they go to China to pick up the porcelain, could stop and pick up the opium, sell it to China, and I don't know if any of you in the business school, but good products are those that have repeat purchases. And opium is a really ideal product because very strong repeat purchases, because it's addictive. So it was a really good product. But China figured out it was not such a good product for China. So it tried to shut its market, and the West said that that's unfair trade. So the West went to war. Well, the United States is trying to do the same thing, not quite so with war, but what I call the do-opium war. And what it's doing is, there's a provision in the trade agreements called the investment agreement. And part of the investment agreement affect regulations. And under this, a similar regulation in an agreement that the US has, for instance, with Uruguay has said that it wants to regulate cigarettes, which cause, I hope none of you smoke, but they're really bad for your health, okay? And they have externalities on the public because they cost the public, anyway. So they said they want to regulate it. WHO said Uruguay's regulations are really good regulation for a health point of view. But under this agreement, Philip Morris is suing the Uruguay government saying that these regulations are an unfair trade restriction. Now, the US wants to make sure that that kind of provision is in the agreements with TPP and with Europe. And you can see that something is wrong because in the case, they're insisting on the same kind of agreement with Europe. So you ask the question, why, Europe thinks that it has good property rights, a good rule of law. Why do they need an agreement that protects foreign investors more than domestic investors? If there's something wrong with the security of property rights in Europe, Europe ought to change it not only for foreign investors, but for domestic investors. And what should be clear, this has nothing about property rights. It's nothing about investment. It's about regulation and an end round around democratic processes. So that's what this is all about. And that's why some of the, there's strong resistance right now there's been strong resistance from Germany and from civil society on this particular issue. The other question was the copyright. And I basically said most of what I wanted to say about it yesterday, that intellectual property is important because people need to get a return on their investments in developing ideas. But the question is, there's a cost, and that's the free flow of ideas. And how do you balance it? And I think the point that was made yesterday is that what we've done is totally unbalanced. 70 years after the death has almost zero incentive effect, but a significant cost. And the real issues now are being raised have to do with the way copyright law may interfere with access to data. So for instance, government-produced data, if it is mediated through the internet through some companies may basically be privatized. So there's a real concern about that they will use these laws to make it more difficult to get access to publicly funded data.
Like the example that you gave last night of the genome that is responsible for.
Yeah, that was actually patent law, though.
Sorry,
That's a different.
Again, a privatization versus public.
That's right. That's right. And that was the reason why I like that example was the social value of the Myriad patent was literally zero,
Right.
but the social cost of that Myriad patent was enormous. And fortunately, in that case, we got the ability to patent that overthrown, but it wasn't easy. And it just, we have 3 levels in our judicial system: district, appellate, and Supreme Court. The district court supported the view that you could not get a patent. But then the appellate level overthrew that and said you could patent. So a slight change in the Supreme Court could have led to a different outcome. Then the Supreme Court finally said no, and it was actually I think it was a unanimous decision. So, but it does show that different courts could have come out with a different decision on that.
Okay, let's take 2 more questions. You're the judge.
I've been reading a few chapters of your book, and I found it fascinating that learning society would be a viable option for developing countries, which seems counterintuitive a little bit at first. Moldova has 41% of its people working in agriculture, and a very low level of interpersonal trust. How can policymakers essentially spark trust in people so that they believe that a change is possible, which is a precondition, as you outlined in your book, for any change to happen? And can such a change come necessarily within a democratic government, or do we need a stronger government, let's say the Singapore model, to make it happen, to see this change? Thank you.
I would like to make a question that you have already talked in your discussion that China is growing economy. And if China may raise an more difficult question like about the governance of dollar as world currency, and if it calls to reform of world institution, and you have a proposal like international currency system, so how do you think that, you could push the implementation of world currency system, and it could ultimately lead to the change or shift of the economic power from east to the west and west to the east? And do you think that it might lead ultimately for the change or shifting the political power from United States to other political hegemony? Thank you very much.
The last question is particularly apropos because George and I we were in a panel together in Stockholm a number of years ago on advocating the need for a global reserve system. And this is an old idea that, just because it's an old idea doesn't mean it's wrong. It's an old idea that goes back to Keynes. Keynes talked about it. And part of the reason for the current system is anachronistic. It's a dollar-based reserve. Countries hold dollars as backing for their country and for their currency. And it's actually associated with a number of problems. I can't go through all of them, but for instance, one of the problems is that if countries are building up their reserves as a security, that means they're spending money, they're selling their goods, but not spending the money. So they're saving. And that means that it diminishes aggregate demand. And that's why Keynes was worried about it, because he was worried. It was right after the Great Depression, and he was worried about the lack of global aggregate demand. And he said, if we could create a global reserve system, we call it a Bancor, but if we could create a global reserve system, we could create the reserves so people don't have to save as much, and that will increase, it's like a global money, that will increase their demand for goods, and that will increase aggregate demand, and that will help the world get out of this situation that we're in today and that we were in back in the 1930s and 40s with a lack of global aggregate demand. So I think it's actually a very important idea, and as the world remains in a situation with lack of global aggregate demand, one would have thought it would have gotten more and more attention, and for some reason it hasn't. You're going to say, you know, there have been a number of countries that have supported this idea. This international commission that I chaired for the UN recommended this, and it got the support of China, France, Russia, but there was one country that was less enthusiastic. You can guess, was the United States. And I explained to Obama why it was a good idea, that in fact it was the interest of even the United States, because one of the problems with the United States is that if people are holding our currency, it's the same problem, that we're exporting T-bills rather than automobiles. I mean, rather than goods. And when you export T-bills, it doesn't generate jobs. And we have a real problem. For a while, we could make up for that by having large fiscal deficits. But we can't have those fiscal deficits. So the problem, the imperative of changing the system is very large. He understood that, but he also saw the other side. And the other side is what some people have called the U.S. exorbitant privilege of being able to borrow at a very low interest rate. And so the U.S. with this huge deficit has focused on the financing problem rather than on the real problem. The financing problem could easily be managed, but the real problem is not easily managed. But unfortunately, they focused on the wrong problem, the financing problem. They saw that the current regime allows them to borrow more cheaply maybe than they could otherwise. And so they've been resistant to creating a global reserve system. And I think it's led to a weaker and a more unstable global economy. On the other question, is a really hard question, but it's a very general question. How do you create trust? Well, first let me say a more general point. I think trust is very important for running the economy. Economists think everything is about contracts. You sign a contract. But in fact, if you had to enforce every contract, if you had to write everything down in a contract, rather than having the large number of lawyers we have today, we'd have 100 times as many lawyers, and the economy would totally be paralyzed. So the fact is, we can't rely on contracts, on legal enforcement. An awful lot of economic and even more non-economic activity is based on trust. And there's an interesting literature that is now developing about what leads to trust, what can you do to create trust. One of the things that became, and there are words the economists have used like social capital, which are ways of trying to formalize the notion of trust. What was very clear in the aftermath of the fall of the Berlin Wall and the transition was that there was a real breakdown of trust. There had been very little trust before, and it got even worse. And I remember visiting one of the countries, Uzbekistan, where there were greenhouses, and the remarkable thing was that there were greenhouses where everybody had stolen all the glass. And the nature of a greenhouse with no glass is that it's not a greenhouse anymore. And you ask people, you know, why did you steal glass? And the answer was, if I didn't steal it, my neighbor would steal it. So the assumption was nobody trusted anybody else, and if it was going to be stolen anyway, I might as well steal it. And then, of course, there was this equilibrium. Their forecast that it was going to be stolen turned out to be true because it was all stolen. It was a bad equilibrium. You all know about Nash equilibrium. It was a bad equilibrium, but that's what it was. It was a no-trust equilibrium. And unfortunately, going from a no-trust equilibrium to a society with more trust is very difficult. And there's been some research about what are the factors that affect trust. I've argued, for instance, that one of the factors that affect trust is the magnitude of inequality in society. When people are more similar, there's a basis of greater trust. When you have a more divided society, more caste-ridden society, you wind up with less trust, okay? So that's one factor. I don't want to say it's the only factor, but it is one factor. In terms of democratic processes, I think when you have a lack of openness and transparency, it breeds a lack of trust. You know, you ask the question, why do they want to be non-transparent? And the obvious answer is they're doing something naughty. And so when the Federal Reserve did not want to disclose, after the 2008 crisis, we gave $180 billion to one company, AIG. And the Federal Reserve did not want to disclose where that $180 billion, you can see pouring money into AIG, but it was going out as we poured it in. And everybody wanted to know, okay, we see it pouring in, where is it going out? And the Federal Reserve did not want to, they knew, but they didn't want to tell us. And we suspected the worst. And we were right.
In the report on reforming the monetary and financial system, you mentioned the issue of financial flow cyclicity. And I would like to know your opinion about the nature of these financial flow cycles. Are there essential consequences of financial market performance, or are they consequences of economic or monetary cycles? And given this, is it possible to lower the rate of further indebtedness of both developing and emerging markets and avoid severe debt crisis? Thank you.
My question is related to economic development and the region Eurasia. In 2014, the World Bank has introduced a report on development. It is called Diversified Development for Eurasian countries such as Kyrgyzstan, Kazakhstan, Uzbekistan, and Russia, Ukraine, and Georgia. So the main idea of this concept was to pay attention, so these countries should pay attention to develop natural development. I mean, to pay attention to resource-oriented economy and build necessary infrastructure, and not to distract attention from other sectors, which is very large investment, and not to distract this money from this particular sector. So I wonder if it really goes with the idea of learning society. Just would like to know your comments on it.
Okay. Financial flows and the instability of financial flows. I think The first observation is that financial flows have always been very unstable. There's a kind of irrational exuberance. When things look good, money flows in. And when things look bad, money flows out. To put it in a particular way, for resource-rich countries, one of the problems is when the commodity prices are high, everybody wants to lend to them. And when commodity prices are low, they want to be repaid. So rather than being counter-cyclical, financial markets tend to be pro-cyclical, particularly in emerging markets. And there's a famous aphorism about this, that what banker lends to anybody, bankers only lend to people who don't need the money. That if you show that you need the money, then you are not qualified for getting a loan. So the point, there's a theoretical basis of this, but so the basic point is the evidence is that financial markets are very pro-cyclical rather than counter-cyclical, and that's one of the reasons that one needs to have what we call capital account management techniques, and even the IMF now recognizes the role for these capital account management to try to stabilize the unstable financial flows. Now, that's the natural state of markets, but in addition to that, government can also create instability. And we've just seen an example of that in the United States when we had QE, quantitative easing. We created the balance sheet of the Fed expanded by $2 trillion, and we didn't fix our domestic credit market channel. And so much of the money went abroad, and it created inflows all over the world in the emerging markets that were doing well, leading to appreciation of the currencies and all kinds of financial disturbances. And again, that was actually what led the IMF to change its position on capital controls, because they recognized that the US policy was so destabilizing that countries needed to respond to offset these effects. So, so it seems to me that there is an important role for policy to try to manage this. Now, there are two other issues I just want to mention very briefly. One is the question that you ask is foreign indebtedness for many countries is very risky. And it's particularly risky if they borrow in a hard currency. And that's really a problem of many of the European countries. They've been borrowing in a currency that they don't control. Many of the African countries suffer from excessive indebtedness, and that problem was finally resolved in the year 2000, 2001, 2002, with the Jubilee initiative that was a debt restructuring. And that was about 12 years ago. And guess what? Now that their debt is down, the banks are back there and saying, will you borrow more from us? And trying to get them more indebted. And I and some other people have been trying to persuade them, no, you don't want, you just learned, you went back, that was where you were, don't get back in debt again. Particularly for those countries, the poorer countries, they can borrow from the World Bank, and especially under IDA, which is the International Development Assistance, at very low rates. Why would you want to borrow at very high rates from the private capital markets? It's one thing to borrow from low rates that are below market rates, but not to borrow from the private capital markets. They obviously like the addiction to debt. But my own view is it's a mistake. One of the interesting issues that's going on right now in global governance, I mentioned this, is the issue of what happens when countries can't repay their debt. And I don't know if you followed this issue, but in 2001, Argentina defaulted. And then it tried to restructure the debt. And a few months ago, an American judge said that basically Argentina can't restructure its debt. And that the effect of this is absolutely profound. It was I think, a wrong interpretation of some technical clauses in the debt contract. It was, the clause is what's called the pari passu clause of equal treatment. And the question was, it said that the vulture funds, which had refused to repay, had to be paid on par with those who had restructured their debt. And of course, if you pay the people who refuse the same as you pay people who do restructure, nobody would have an incentive to restructure. So it really undermined the ability to restructure. In response to this, in September of this year, the UN passed a resolution to develop a new framework for debt restructuring. And the US is trying to undermine, and it was passed something like 124 to 11. 11 countries, United States twisted the arm of 10 other countries to vote against it. And now it's trying to undermine this international effort to create a framework for debt restructuring. So this is actually one of the really interesting questions on international governments. There's no international bankruptcy law and no framework for debt restructuring. The IMF, the interesting thing about the IMF in 2001 had called for such a framework. It said it was really important. And the International Commission that I chaired called for it. But the US vetoed these efforts. So the US vetoed the efforts and then had a court decision to say not only isn't there a framework, you can't restructure your debt. So, not surprisingly, a lot of anger about this in the international community. When I go back next Monday, we're having an international conference of experts trying to figure out how to design a framework for international debt restructuring. So this is a very big issue when it comes to sovereigns borrowing. On the other question on diversification, I don't know all the details of this World Bank report, but let me say that more broadly, I think natural resource countries, particularly, really do need to diversify their economies. They've been too dependent on natural resources, and because natural resources prices go up and down, that means their economies experience a lot of volatility. It's one of the reasons, only one, but one of the reasons that natural resource economies, on average, have not done very well. That's called the natural resource curse. And I've been I was just in South Africa, and they were having a discussion exactly on this issue of how to promote the diversification of their economy. South Africa has platinum, gold, a number of other natural resources, but over the last 30, 40 years, like much of Africa, there's actually been a process of deindustrialization. Rather than diversification, it's gone the other way. And that's been partly because of the way the trade liberalization has not been managed well. But it's also been because of the way monetary policy has been handled. So one of the big issues that we were discussing in South Africa was the issue of the role, the extent to which the central bank ought to be focusing on not just interest rates and inflation, but also, not only on inflation, but also on exchange rates. And by trying to create a stable and competitive exchange rate, it can promote diversification of their economy. But they also were very strongly responsive to my book, A Learning Economy, because they were very much, they've been actually trying to implement these kinds of ideas. And what's very interesting about South Africa is there have been a number of instances where they figured out how to take some of the learning that they've gotten as a natural resource producer and amplify it into other areas and to diversify. So for instance, to give you one example that's quite interesting, one of the problems when you're a diamond mine, you have a diamond mine, I don't know if it's a problem any of you face, you have a diamond mine, one of the problems is that people steal diamonds, and they're very small, and you can hide them. So they had to develop a detection device that would detect whether their workers were stealing diamonds. And it had to be low radiation. And it turns out that they were able to do this. And now this technology is being used all over the place because there are lots of other things that you want to detect, small amounts with low radiation. And it turned out that the problem of security of this kind has many applications. Another example in a very different context is Norway is an oil industry country. It took the ideas, I think I may have mentioned this yesterday, took the idea that pumps are used everywhere, and you could take what you learned about developing pumps for oil into pumps for many other uses. So there's lots of learning that even in a natural resource economy can be applied to other areas, particularly when you think of both the horizontal, vertical, backward, forward linkages associated with the production of natural resources.
I'd like to ask you a question about Russian Academy of Sciences, as you are a foreign member of this organization. Not long ago, Russian Academy of Sciences was reformed and reorganized. Two more academies, Academy of Medicine and Academy of Agricultural Sciences, were merged with Russian Academy of Sciences. And the function of management, resources, and finance was taken from Russian Academy of Sciences and given to newly established federal agency. Professor Stiglitz, can we consider what has happened to Russian Academy of Sciences as a case of asymmetric information in policy making, when the government being unable to really assess the activity of the institution introduces quite extreme reforms? Thank you.
My question is related to China's role in development, economic development, I guess. So, since I come from Turkmenistan, I want to ask you a question related to Central Asia. For instance, in Central Asian governments use Chinese example to make an excuse of their undemocratic governance, saying that economic development is more important than providing human rights and democratic freedoms, etc. So my question is, to what extent do you see Chinese development model, which is there's a strong state intervention, and I know that you are supportive of state intervention, maybe during the market failures. So my question is, do you see Chinese development model attractive, and do you think developing countries should or even could follow Chinese model? And if they did follow, what it would lead to? Because if every country would be so protectionist and states would start intervening in the markets, what it would lead to? Thank you.
I don't know very much about the Russian Academy of Science. In fact, I didn't know for many years that I was a member of the Russian Academy of Science. And somebody told me, and I said, well, very nice. I don't know what it meant, but I can tell you it's not very burdensome. But I don't. They certainly didn't consult me when they went through these changes. So I don't have any strong view about that. It is interesting what you say, and let me talk about the China's development strategy. Again, I don't know a lot about Turkmenistan except to say that from what I've read, it's not the role model of political institutions, and particularly democratic political institutions. Let me divide the analysis into two parts. What is China's economic model, and then that's the political aspect. The economic model had many different ingredients to it, and some of it are very distinctive. You know, it was a very rural-based economy, very poor, and it had to move from rural. It began with a rural-based development strategy. What I think is remarkable about the strategy of China is how often it's changed. So you think about the Chinese strategy, there isn't one strategy. They just did one thing after another. And it was a constant process of learning and adaptation. So, for instance, in one of the real challenges that faced all the economies in transition was they knew they needed to go from the planning prices, the planning quotas, to a more market. But how you make that transition is very difficult. And they invented the system of dual prices. And it actually worked pretty well. All the advisors from the outside said it was never going to work. But it actually worked. And then in the next stage, they had a problem, you know, this idea of there was a lot of discussion of privatization of land. And what they said is, no, we're not going to solve that problem initially. We're going to give people what was called the family responsibility, individual responsibility. So what they did is give them a lot of incentives, but not full ownership. And in doing that, they solved 95% of the incentive problem, but without getting into all of the political problems that full privatization would have led to, the potential of concentration of land, wealth. And so what they said is, we're not going to solve all those problems. We can get what we want, which is incentives, with a 95% solution. And it worked. And then the question was, how do we begin industrialization? And this was a real example where in one part in Suzhou, the people came up with the idea of TVEs, Township and Village Enterprises. It worked. And then they spread around the country. And it was a model that worked for about 15 years. But then they invited in joint ventures, and that worked for a while. The TVEs phased out. And now they're saying, oh, we don't like joint ventures so much, we want to run the show ourselves. So they're going through a whole series of models, and so I wouldn't describe, there's nothing that you can describe as the Chinese model except that constant adaptation, that we're very sensitive to the circumstances that they were in. You know, how do you do that is a very hard question. One of the things they did that I think was very interesting was throughout this process, they were remarkably open to discussions with outsiders. So at each stage, they were bringing in lots of people from the outside to discuss what should they do. They didn't always listen. I mean, they didn't always follow the advice, but they were very aware that they didn't have all the knowledge that they needed. So they were very focused on learning, on all kinds of issues about how do you set up a Social Security fund, how do you set up foreign exchange rate management, capital controls, the pace of opening up capital markets, trade liberalization. They were much more open than almost any other country that I know in inviting foreigners to give the views. And what was interesting is they were also very open about getting a wide range of views. So in Social Security reform, they would get somebody like me and somebody like Marty Feldstein, who didn't agree at all. And they enjoyed having the fight and the debate, and out of that they would try to figure out what was the right view. So I think this kind of openness in economic debate was really part of the characteristic of I think, China's success. They did have a lot of state intervention, but that was always debated, how much they should go. And, you know, one of the striking things, for instance, about 8 years ago, they developed a set of policies that were focused on bringing up the rural sector, because the rural sector had lagged behind, and it was very strong. They called it creating more harmony. But the real point was that education and health in the rural sector was behind. And they developed a whole set of policies that have worked pretty well to reduce that gap. But what was so interesting, you know, when I would go to China, how many people claim credit that was their idea in China. And what that told me was the government had consulted very widely. It was a result of ideas that a number of people felt, and they were perfectly happy to let a large number of people claim credit from the ground up for what was the key economic, some key economic policies. So in terms of economic policy formulation, there's actually a lot of openness. And going back, for instance, on the issue of trust, I've been, you know, at a day-long meeting with the state council people in the state council on what real problem in China about trust. Nobody trusts the milk. Nobody, you know, the environment is real. So they realize this is a really big problem. They haven't gotten the solution yet, but they are, you know, open to listening to large numbers of foreigners talk about a problem that you would think of as very sensitive about the lack of trust in their society. So that's on the, as I say, on the economic side. It really is I would say, an unusual degree of openness and a high degree, you know, government intervention, but it's intervention that is widely discussed and criticized by some, supported by others, scrutinized, debated constantly. The other side is the political, and that's not so open. There are some aspects of the political that are interesting. The Chinese Academy of Social Science has had a unit working on right to know laws, access to information. And it's interesting because they've actually encouraged the press in certain areas. They realize it's a large country and that the people at the top aren't getting information from the bureaucrats. So they realize they need many eyes to make their economy work, their society work. So they actually almost encourage the press to root out corruption. So for instance, there was a railroad minister who was known to be corrupt, you know, sort of the gossip was, and in every society, people gossip, and you know, much of the gossip is probably true, and so everybody was talking about the railroad minister being corrupt, finally, one of the major magazines ran a big story about how corrupt he was. And he got fired. And the government has encouraged this. Always the question, how high can you go without getting into trouble? The New York Times wrote an article about the premier, and they were banned. So that was going too high. So that was a case where I don't want to say that it's an open, it's not an open society, but you can criticize fairly high up, but there are limits. And now the final question I want to say is one of the points that I made, I should have made yesterday, about non-democratic political processes, where I've written a little bit. We see some success stories, like Singapore, but we don't talk about the failures, like Turkmenistan. So the point is that there are many more failures than success stories. And the problem is that in the absence of the open and transparent systems, you don't have any checks on the failures. And that's really one of the arguments for why you want to have an open and transparent system, to try to circumscribe the failures that will all inevitably arise. And that's really why it's important to try to keep open and democratic processes going.
My question is also related to China and BRICS. So in BRICS, Russia is most enthusiastic about finding the currency which will be an alternative to the US dollar in the international transactions. And do you think there will be opportunity, do you think Chinese yuan can be or will become major alternative to the dollar? And will there be some changes in the international monetary system related to that? Because recently Russia agreed on a deal of gas supply to China and for yuan, and they hope to increase the cooperation in yuan. Thank you.
Yeah, there are many functions that any currency performs. It's a medium of exchange, it's a store of value, and you want to think about the various functions that a currency performs. So in the case of, if most of the transactions, if a very large number of transactions are going on in terms of trade between China and other countries, it will be inevitable that a larger fraction of the transactions will be denominated in Chinese currency. It will reduce the risk of at least one of the two parties. One way of thinking about it is, if you have a transaction between China and Russia and you denominate it in dollars, then both China and Russia experience exchange rate risk. If you denominate it in yuan, at least one of the two countries has less exchange rate risk. So one of the reasons for using a particular currency is that it reduces the exchange rate risk. And so that's why I think it's inevitable that the use of the yuan as a medium of exchange will increase as China's trade, and it's already been increasing markedly in those terms. Now, in terms of store of value, it's a reserve currency. That's different. That's part of the issue that I talked about before about creating a global reserve currency. Some people want to say, rather than creating a global reserve currency, let's try to create a system, a global system based on multiple reserve currencies, euro, dollar, yuan, yen. I've been critical of that because that's going to be very unstable. If for a while people think that the dollar is a stronger currency, people will move into the dollar. They think the dollar is going to be unstable, they'll move into the yuan. And that process of judgment will itself give rise to instability. So that's why I've been very much supportive of a global system. And the individual system of multiple reserve currencies doesn't solve the problem of the lack of global aggregate demand that a global reserve system would solve. So that the reason for having a global reserve system, I think, is still imperative. But I do think that there will be a move more to, in fact, there are already discussions about something called the SDR. There's a kind of reserve currency that the IMF has called special drawing rights. And the inclusion of that one require, the discussion about whether it can be included will, the extent to which they'll have to eliminate capital controls and liberalize their capital markets. I don't think they will fully need to do that. They may have to do more than they are currently. Question of convertibility. So in many ways, I don't think this is, while there's a lot of attention to it, and it has a lot of symbolic value, that the dollar is the reserve currency, I don't think it's actually that important economically. Final point, in the 19th century, the sterling was the reserve currency, and that was true until basically 1944, and there was a period of transition. Keynes, when he went to Britain, remember what I said before, that it's disadvantageous for a country to be a reserve currency, because people will buy your currency, and that means you'll be exporting your currency rather than goods. And that leads to an appreciated exchange rate, it leads to trade imbalances, it leads to a weak economy. So Keynes went to Bretton Woods with two objectives in mind. One is that Britain would no longer be the reserve currency because he realized how bad it was for Britain. And the second one was he would create a global reserve currency. The US vetoed the second, but Keynes succeeded in the first in getting rid of the sterling as a reserve currency and passing the hot potato to the United States without the United States realizing it had been passed a hot potato. So it was a great achievement of Keynes. It was a great failure of the United States, and we are now living with the consequences of that failure.
For now, what I want to say that it is really unique and rare to get somebody into the room in front of students literally from all over the world and be able not only to answer the questions that you did, but I think all of us that are interested in policy answer them in this deep, not only deep, but also interdisciplinary way. Most of your answers were not just about economics, but they did look into and take into account the politics, the social dimension, the legal dimension, often very technical issues. And this, of course, is all what policy and public policy is about, the grasp of the interdisciplinary, the multidisciplinary that most of these problems are. And I think we can all very much learn from you, and I really, really thank you for coming here today. Thank you.